Welcome, everyone. Thank you for joining us here at the Heritage Foundation. I have the opportunity this morning to introduce two of my favorite people in the Senate, and the reason for that is when they both took on their campaigns to run for the United States Senate, almost no one in Washington wanted them here, which means they're our kind of folks. So, and I thank you, and they have not disappointed. They stood for principle. They're great friends, friends of freedom, friends of heritage, and personal friends as well. So Mike and Marco, thank you both for being here. Just a little bit about Mike Lee. Mike is a BYU Law School graduate. He clerked for a number of people, including Justice Alito. He is a leader in the Senate and serves on the Judiciary Committee and a number of subcommittees, but perhaps the most important role is chairman of the Senate Steering Committee. And I found when I was there, you get blamed for almost everything that goes on that folks don't like or like when you're chairman of the Steering Committee. You have to stand up against everything that goes through that needs to be stopped. And Mike, we really appreciate you doing that. And Mike has recently come out with a new book, not his first, but it's about our lost Constitution, an excellent read for those who want to really understand what it is that we're losing and what we need to restore here in America. So, Mike, thank you for being here today. Senator Marco Rubio really has lived the American dream. He's been quiet recently. We haven't heard much from him, but that's why he's here today with us. He has been a public servant for many, many years in Florida, set an example as a state rep, and very quickly became majority leader. And at a very early age, he was Speaker of the House in Florida. When he set about to run for the Senate, just as Mike, it was a David and Goliath quest where no one saw that it was possible. But what we saw is the American people in Florida and Utah and everywhere recognized people who were willing to stand up for principle. Marco recently authored a book, American Dreams, Restoring Economic Opportunity for Everyone, which we really like at Heritage because our theme for the next couple of years is opportunity for everyone, favoritism for none, and we'll continue to talk about that. They're here to talk about a tax plan today, and I found when I was in the House and the Senate that a lot of candidates, politicians, talked about the need for tax reform and tax simplification, but very few actually introduce their own plan or even sign on to someone else's plan. And that's because once you put the specifics out there, people can misuse them, they can twist them, they can use them against you in the next election. So it takes a particular kind of vision and courage for folks in elected office, particularly in the Senate, to actually get the conversation started with a tax plan with a lot of good components to it that can help America begin to see what this could do to our economy and job creation in America if we fix our tax system to make us competitive with the rest of the world. Two great friends, thank you so much for being here, and I'll let Senator Lee start us off today.
Thank you very much, Jim, for that kind of introduction. We still miss you in the Senate, but it's good to have you just right across the street. We developed a tax reform plan that is pro-growth and pro-family. It's designed at once to facilitate economic growth, the kind of economic growth that will help American families, America's poor and middle class in particular, and also help get rid of distortions within our tax code and some of the complexity that is itself a massive subsidy of the massive industrial government complex that you can find in and around Washington, D.C. As Arthur Brooks recently said, complexity is itself a subsidy. It's a subsidy for some of the wrong kinds of things. And our current tax code is very complex, and it also tends to punish investment, hard work, savings, marriage, and having a family. Yes, our tax code actively punishes people for getting married, for having children, and doing all kinds of other things that we generally regard as good, that we generally should not be punishing through our tax code or otherwise. So On the individual side, we've come up with a two-rate system. Going from 7 rates down to 2 rates is not easy, but we think it's essential toward tax code simplification and toward achieving the kind of new system that we want. Under this new framework, the overwhelming majority of all Americans, about 80%, would pay under one essentially flat rate of 15%. Subject to 2 deductions, one for mortgage interest, the other for charitable contributions. And all others would pay at a marginal rate of 35%. And these rates begin, the higher rate begins at $75,000 for a single filer, for $150,000 for a married couple filing jointly. On the individual side, we've added a child tax credit, a new child tax credit of $2,500 per child per year. This is there to get rid of the parent tax penalty. We're all familiar with the marriage tax penalty. That is a somewhat obvious feature within our code and a very well-known one. A much more subtle and less well-known feature in our tax code is the parent tax penalty. The dynamic through which the federal tax system, operating in tandem with our senior entitlement programs, Social Security and Medicare, effectively tax American parents twice. Once as people pay their taxes, both on the individual side and on the payroll side, and again, as they incur the substantial costs of raising children. According to one, I believe, lowball U.S. Department of Agriculture study, it takes $300,000 to raise a child to maturity. This doesn't take into account certain things that it should, but let's just assume $300,000 is an average cost that we can live with. When you look at 2 hypothetical couples, couple A and couple B, you can see how this parent tax penalty hits America's moms and dads. Imagine couple A and couple B. They have the same income patterns, they have the same charitable contributions and more mortgage interest payment patterns. Imagine everything about them economically is about the same, with one exception. Couple A has 4 children. Couple B chooses to remain childless. While raising their children, couple A will incur on average $1.2 million in child rearing expenses. And couple B will not incur that. Couple A, in incurring that $1.2 million expense in raising their children, is shoring up Social Security and Medicare, which are funded on a pay-as-you-go basis. Today's workers fund today's retirees, today's beneficiaries of Social Security and Medicare. And it's today's children that will fund today's workers when they become retirees down the road. We believe this $2,500 per child tax credit is an important step toward eliminating the tax inequity, the unfairness, the parent tax penalty. On the corporate side, we reduce the rate down to 25%. We create a single layer of taxation. And we do this in a way that we believe will promote economic growth, and we end the double taxation of corporate earnings by getting rid of taxation on dividends and also on capital gains. These are the basic highlights, and I'll now turn the time over to my friend and my colleague, Senator Rubio, to give some additional explanation, and then we'll answer some questions.
Thank you. And I'll be brief. We want to get to your questions. I want to thank Heritage for giving us this forum, and it's always great to see Jim DeMint. Actually, Jim, as I was driving in, we drove by the spot where 4 years ago, or 5 years ago, I held a press conference about my then nascent Senate campaign. The reason why we had to have it there is no one in Washington would let us use their facility at the time because I was not supposed to be running or winning. But Jim DeMint found us a small sidewalk space somewhere where together we held this press conference, and the rest is history. So we're always grateful. And it's good to see you. And thank you to Heritage for inviting us here, giving us this opportunity, and for all the scholarship that they do here that really serves as a guidepost for a lot of the public policy we choose to make. 2 points that I would make, and I've been trying to make, as Mike has for a significant period of time. The 21st century is a dramatically different time from the era that I grew up in and Mike grew up in and almost everyone in this room grew up in. For example, we no longer simply operate in a national economy. We are now engaged in an international global competition with dozens of developed economies who are competing with us for innovation, investment, talent, ideas. And we want to make America in the 21st century the single best place in the world to invest and to innovate. And part of that has to do with our debt, which is a significant driver of what's made America less competitive. A lot of it has to do with our regulatory systems in this country, which serve as a significant impediment, but our tax code does too. And we've talked about that repeatedly in the past years. We have a tax code, for example, that has the highest combined corporate tax rate on the planet. We can no longer afford to do that at a time when other nations are going out of their way to become a friendlier environment for investment. So it shouldn't surprise us to open up the newspaper and see yet another iconic American company making the decisions they need to make in order to be in a friendlier environment. And so we've taken steps in this proposal to be pro-growth. We want our economy to be dynamic and to be vibrant. We want it to be the single best place in the world to create jobs. And we want a tax code that says the more you innovate and the more you invest into the American economy, the lower your tax burden will be. And that was the purpose of our pro-growth approach to this matter. And the reason why that's significant is we honestly believe that if we can create an environment where America can compete globally with anyone, from just the standpoint of how government treats business activity, we honestly believe that the American people will do what they've always done. They will create millions of jobs, and not just jobs, millions of better paying jobs, which is critical because of the second point that we wanted to emphasize, and that is the cost of living. The bottom line is that there are millions of people today who have the same job they had 10 years ago. But 10 years ago, 15 years ago, after they paid all their bills, they still had some money left over to save for retirement, to save for their children's college expense, you name it. Now those same people with the same job are often living paycheck to paycheck, literally one unforeseen expense away from disaster. If their refrigerator breaks, if their engine on the car blows out, they have no idea where they're going to get the money to pay for it. And that is a real problem for our country because everything costs more. And we have new expenses we didn't used to have, and paychecks haven't kept pace. Part of solving that is having a vibrant and robust economy that creates better paying jobs so that people aren't making $16 an hour, they're making $30 an hour or $32 an hour. We need those better paying jobs that the 21st century creates the opportunity for. We learned a lot about the disruptions of this new century. It's an extraordinarily disruptive time. It's changed a lot of the way things used to operate, but it's also created extraordinary opportunities. We have a chance to replace the jobs we've lost or the jobs that paychecks are stagnant in with better paying jobs that provide a higher quality of life, more professional fulfillment, more opportunity for advancement, and better pay. But the second aspect of it is allowing people to keep more of what they earn. And this is particularly problematic for working families that are trying to raise children. Senator Lee, I think, has done a good job already of explaining to you the cost associated with raising a family and the contribution that that makes to America's future. These are America's future taxpayers. And it is important for families in the 21st century to be able to keep more of their money so that they can apply that, not just to the costs of today, but to the opportunities they want to give their children tomorrow. But here's another dynamic that's often lost in the mix. There are hundreds of thousands, if not millions, of companies in America that pay their taxes on their personal rate. If you're someone who started a business out of the spare bedroom of your home, not only are you probably doing so in violation of the zoning code, you are also probably paying a tax rate significantly higher than your larger competitors because you're an S corporation. You're what they call a pass-through. And you pay your business taxes on your personal rate. And one of the things we do in this plan is we create equity between an S corporation, a pass-through, which, by the way, are not always small businesses, but invariably most small businesses are S corporations. We create real parity between them and the 25% tax code. And that means a lot to millions of people out there who are operating a business out of their home or out of a one-desk office or maybe have 2 or 3 employees. In fact, I would venture to guess that today most, if not all of you in this room today, have had some experience at some point with a pass-through entity as the way you do business and the way you employ people and the way you employ yourself. And creating that parity is important. We'll get more into the details of the plan, but here's the bottom line. It's good to go back in history and learn a little bit. You know, it's interesting, in the beginning of the 19th century, in the 1800s, America was still largely an undeveloped economy. Britain was the single largest economy in the world, the most powerful industrialized economy in the world. The United States was still largely an agrarian society. But then a generation of Americans decided we want to fully capitalize from the opportunities of this new industrial age. Less than 100 years later, America was the most powerful economic force in the world. That generation of Americans not just confronted the challenges of industrialization, but capitalized on its opportunities. I would argue to you that we are now living through a period of transition as rapid, as dynamic, and as impactful, and perhaps more disruptive than the Industrial Revolution was. And you see that every single day. Every time you go to the checkout counter of a grocery store and you're swiping your own barcode on an automated machine instead of the cashier that once did it, it reminds you that a job has been replaced by a machine. But it should also remind you that someone had to install that machine. Someone had to design it, someone had to build it, someone has to maintain it, and someone needs to be working to replace that machine. We need to be the economy that does those things. We need to be the economy that creates opportunities for the cashiers to become the engineers. We need to be the economy that allows the receptionist at a law office making $12 an hour to become the paralegal making $50,000, $60,000, $70,000, $80,000 a year. A lot of that is reforming higher education, but a lot of that is creating the sort of dynamic economy where those jobs are created. We want to be the place where they build these machines. We want to be the place where they design that software. We want to be the place where we employ the technicians that repair. And we want to be the place where the innovators live that are working on the new 21st century machine that will replace the one that's already in place. And to do that, we have to have a tax code, along with a regulatory code and other things that we're working on as well. But we have to have a tax code that makes us globally competitive. And that's what we endeavor to do in this plan. This plan is a white paper. It is a working product. It is the starting point of what I hope will be an important engagement. To do something as big and as important as tax reform cannot be a take it or leave it proposition. There are a lot of good suggestions out there. We're listening to some of them, a lot of them. And we always look for ways to improve our plan. But our hope is that from it, we can arrive at a consensus in America about what a 21st century tax code looks like. Thank you.
My name is David Burton with the Heritage Foundation. We now have time for some questions and answers, but first I'd like to say that the Heritage Foundation is a 501c3 public policy research foundation, that we don't endorse candidates or get involved in political campaigns. I would ask that you limit your questions to public policy, preferably the subject matter of this event, tax policy. With that, who would like to ask a question? This gentleman. And yeah, if you would, please wait for the mic and state your name and institutional affiliation.
I'm Joel Mandelman. I'm an attorney here in Washington. In the introduction to your proposal, you listed only two things that you were going to allow to be deducted from personal income taxes: charitable contributions and mortgages. Was leaving out deductions for state and local property taxes just misspeaking, or do you actually intend to abolish that deduction, which would hurt families enormously, especially in places like New York, New Jersey, California, where state and local property taxes and income taxes are catastrophically high now?
Well, let me just answer that by saying I come from a state with property taxes and a system that we've tried to reform in a state that has sales tax as well. And our view of it is, if you look at the tax code in its totality, over 9 out of 10 Americans, the vast, enormous, overwhelming majority in its total, will save more money under this plan than they're saving today on their tax code. Again, any sort of effort to simplify our tax code and to limit it will require us to look at different exemptions and remove them in exchange for lowering the rates on people. And that's what this plan does. And that's just on the tax code side. It would eliminate, it would lower the ultimate, in essence, what you're concerned about is that people now are able to write off the expenses of their property and sales tax on their tax code, off the tax liability that they have. Under this plan, they would actually save as much, if not more, than they're saving under that existing system. And that's without even taking into account the economic growth aspect of the plan, which would also create increases in take-home pay for a large number of Americans, millions of Americans.
There is a problem with excessive taxation at the state and local level in addition to the federal level. And we think this is a way of putting the attention where it ought to be, which is with the decision maker at the state and local level.
Next question. Yes.
Hi, I'm Kelsey Snell. I'm from Politico. I was just curious if you have any reaction to the score that the tax plan received. On a static basis, the Tax Foundation estimates that the plan would lose about $414 billion a year. And on a dynamic basis, over the first 10 years, it would lose, let's see, $1.7 trillion. Do you have any concerns about what that 10-year phase-in would do to the economy?
Well, first of all, I think when you look at the economic growth that this would prompt, at the fact that this is leveling the playing field, that this is removing disincentives that we have for business formation and for family formation, this really will help the economy. And I don't think the American people are likely to complain overwhelmingly about having their tax burden reduced. We did design it with the understanding that it would amount to a cut, that it would be somewhat revenue negative. And yeah, we think this is good. This is good for the economy. This will stimulate economic growth, and over time, I think this will more than pay for itself. Anything that enhances freedom and that is pro-family and pro-growth is going to be good for our country and good for our economy.
That's a great question. I'm glad you asked it. I'm looking for the opportunity to answer it. A couple points. First of all, it's not fair to score a pro-growth tax plan on a static model, because you're taking away from it its most important element, which is it will grow the economy. But here's my second point. We have a very serious debt problem in America. It is one that we can neither solely tax our way out of. In fact, we cannot tax our way out of it, because if you confiscated 100% of all the money made by millionaires this year, you barely make a dent on the long-term debt. And you can't simply cut your way out of it either. You have to do the combination of two things. It is the only way to bring the debt under control. You have to do two things, and you have to do them simultaneously. You have to grow your economy so that your economy is larger than the share of debt that represents it. And second, you have to hold the line on spending. And that's why this plan is the growth side of the equation. This plan is designed to create the dynamic growth that we need, not just to empower, to fuel the American economy, but to create the revenue for American government to bring stability to its spending. Again, revenue by creating more taxpayers, not more taxes. We still have to deal with the debt problem. Irrespective of if this was a tax increase plan, you would still have a problem with the debt, because you can't realistically raise rates to any level to deal with the debt. We still have to deal with the long-term drivers of our long-term debt, and that is Medicare and Social Security and Medicaid that are as currently structured are unsustainable. And that is a whole separate conversation, but an important one to have, because people in my generation and in Mike Lee's generation are going to have to accept that our Medicare and Social Security is going to look different than our parents'. My mother's on Medicare and Social Security. I don't want to see her harmed. But here's the truth. If we stay doing what we're doing now, the math is very simple. These programs bankrupt themselves. And so we're going to have in this country, an effort to reform those programs so that they exist without changes for our parents and grandparents, and so that when I retire and Mike Lee retires and many people in this room retire, we will still have the best Medicare and Social Security system in the world, but it will look different than our parents, but it will actually be sustainable for our children and grandchildren to inherit as well. You have to do both.
Next question. Ma'am in the back.
Thank you. My name is Jeannie Nguyen with Voice of Vietnamese Americans. I thank Senator Rubio and thank Senator Lee. I have a lot of trouble with the flat rate tax that Senator Lee talked about for 15% for everyone with the income up to 75 and the couple up to 150. And then after that, it would be 35%, you said. So that is exactly where my trouble is, because I believe 90% of our middle class income falls right there in 150 or 200. So would you be taxing 90% or 99% of our middle income class, 35%, when the 1% like Warren Buffett would still pay 10% tax? How does that make the difference? I also had trouble with Senator Rubio's talk about the healthcare system. I believe the Affordable Care Act is the answer to the healthcare spending right now. And I believe, plus with many other programs, especially R&D, research and development, would promote innovations and bring us more better jobs in competition with the global market, especially with China and many other rising powers. So why would we cut the R&D, and why would we attack the Affordable Care Act? Why, if we promote that current growth trend, we would cut the deficit. We cut the deficit more than 50% in 10 years. Thank you.
Okay, first of all, thank you for your question. This was one of the things that we took into account when we started developing this plan. We started first and foremost from the standpoint we did not want a tax plan that would produce a tax increase for the middle class. We wanted something that would help the middle class and help grow and expand it. We've got data that can show you this and charts, but look, almost no one in the middle class would see their tax bill increase. Those very few that did would see only a slight adjustment there, but very slight. This is not a middle-class tax hike. This is a middle-class tax cut, and would be very pro-growth, and we're attempting to level the playing field here. We've got charts to back that up.
Well, first of all, as I've said, this plan, we believe and have seen the evidence that it would cut taxes for over 90% of Americans, some of them quite significantly. I think it's impossible to do that and raise taxes on the middle class, since 90% of Americans are not in the top bracket or wealthy. The second thing you have to understand is that the rates alone are not the basis of your tax liability. It also includes the deduction, the personal deduction, and the deductions that we allow that are quite generous. You also have to take into account we're removing the marriage penalty, the per-child tax credit. There are all sorts of other things that, for example, the people at the 15% bracket would pay less than they're paying now at the 10% bracket because of all those things that are built in. And then you talked about the health care law. It's obviously not the topic of this conversation per se, but I think we have to understand its impact on the tax code and on individual Americans. It is true that there are people in this country that have signed up and are receiving Obamacare through some form or system, depending on where they live and how they've applied for it. It's also true that many of them are now saddled with extraordinarily high deductibles, high co-payments. They can't see specialists anywhere near where they live. They've lost a doctor they once had access to. There are less people now willing to enter the healthcare space. Over time, the only way to make this cost-effective is to reduce spending on innovation in healthcare, because reimbursement rates are going to be crunched in order to be able to parcel out healthcare in a way that they find sustainable. That will lead to cuts in both innovation and in medical and in provider networks that are now available to patients. And then to top it all off, we're on the verge of having to bail out a bunch of companies that went into these exchanges and are losing money. So I imagine other than that, it's working quite well, but these are major impediments to the future of availability of health care for millions of Americans.
Anyone over here? This gentleman.
Thank you. John Zhang with CTI TV of Taiwan. Senator Rubio, you have a lot of fans in Taiwan, even for your tax work.
That means I don't have very many in Beijing, but that's okay.
Could you tell the people in Taiwan why tax reform in America is so important? And if you could touch on the Taiwan policy, so much the better. Thank you.
Well, I don't know how I can link the two other than to tell you that I think economic growth, look, we want to be a globally dynamic economy again. We understand that we're engaged in a global competition, which is, by the way, not always a zero-sum game. In essence, Americans benefit from there being millions of people around the world that can now afford to buy the products that we make, the services we offer, the things that we innovate. We want there to be a growing and vibrant global middle class. But we also want to be able to be competitive in the global marketplace in terms of the place where we create jobs. There will be higher paying jobs that provide more upward mobility created in the 21st century. The question for Americans is how many of them are going to be created here versus somewhere else? And increasingly, there are now dozens of economies around the world that are creating a friendlier environment for investment and for innovation. They have better taxes on investment. They have a better tax system on companies. They have a better tax system on innovation. Even on the personal side, it's simpler to comply. And then you add to that regulations, the fear of a long-term debt crisis, et cetera. I think it's imperative for Americans to be globally competitive. I think that's true for countries all over the world, and particularly in the Asia-Pacific region, which is where much of the economic activity is really going to grow rapidly in the next century.
Over here. This gentleman.
Thank you, Senators. Mike Warren from the Weekly Standard. A lot of conservatives consider tax credits to be tax spending and say they prefer tax deductions. Your plan obviously takes the view that tax credits are the better way to go. What's the defense to conservatives who might disagree with that?
It's just wrong. I mean, look. This is not, so those who look at it as a bad thing try to describe the child tax credit as a subsidy, as a special interest giveaway or something like that. It's not. This is an offset to an existing penalty, to an inequity that exists under the current system. Our tax code coupled with our senior entitlement programs produces a parent tax penalty that we're trying to offset. Now, I'm not certain that the child tax credit that we provide completely offsets the penalty, but it's a step in that direction, and I wholeheartedly defend it for that reason.
And I would just add, and I'm not saying this about our conservative critics, who I believe largely just believe in a flatter tax code that's the rate that's the same for everyone. And that's an attractive argument to make. And there are elements of that embedded in this plan. But I think it's important to understand what the tax system is. There are two ways to view it. One way to view it is, and I'm not saying this is what conservative critics believe, but it's important to point this out. One view is the government's entitled to 100% of your money, but we'll let you know how much of it you can keep. And the other view is we're entitled to 100% of our money, but we understand we have to have a government, and we're going to let you know how much we're willing to send you. That's the view that I adopt, the latter. And in this case, what we're saying is that families that are raising future American taxpayers should not be penalized for having those additional costs. And so for them, they're going to send less money to Washington than they otherwise would because they're making an extraordinary contribution to America's future by raising the people that are going to grow up one day, innovate, invest, and fund the entitlement programs that are so critical to our seniors and retirees.
Next. Okay. Yes, ma'am.
Nadia Chao with the Liberty Times, Taiwan. I think the two senators proposed the tax reform here today is because you want to get American house in order. And many of your alliance in Asia actually pretty worried that a declining U.S. and a rising China in that area. I just wonder, do you have a view about, do you have a confidence about U.S. presence in Asia? Especially, friends in Taiwan are worried that U.S. may not able to maintain the stability in cross-strait with the rising China and a growing military, muscle. I wonder, do you have any comment about that?
Well, my first comment is America's not in decline. We just happen to have a period of time where we have a bad president, but we're going to overcome that. And my second point that I would make is our alliances in the Asia-Pacific region are critical. I think that, look, I'm hopeful that China's rise will not just be peaceful, but fair to its people. China has a real challenge on its hand. The China model has run its course, and they're now going to have to decide how to meet their people's expectations. Are they going to meet with a political crackdown, or are they going to meet it with an economic opening? And right now it looks like they're leaning in the direction of a political crackdown. And that's particularly apparent given all the other challenges that they now face internally as a nation. They have a very serious demographic problem. They have a very serious environmental degradation. They have very serious political issues long-term in meeting the expectations of their people to be able to participate in the global conversation the way free citizens do. And I think part of the danger in all of that is that they would turn towards nationalism, as you see now in the construction of, they're basically building islands to stake out their illegitimate claims in the region. So part of our response to Asia, which is an important increasingly important part of the world in the 21st century, is clearly about our defense alliances. But part of it is our economic links to the region as well. And I think we have a strong interest in increasing trade, commerce, and interaction with our allies in Japan and in South Korea, in the Philippines, and in Taiwan. And and part of that is America has to have a strong and robust economy. So my message to our allies in Asia is the American people are ready to enter a new American century. They just need leadership in Washington that gives them the chance to do it. And if they do, America will be stronger than it's ever been, and our alliance with our allies in Asia and around the world will be firmer and more stable than they've ever been.
This gentleman.
Nick Kelman from Fox News Channel. You've already heard some of the criticism that conservatives are saying about tax cuts not going deep enough for the top bracket, among other things. I wanted to get your specific reaction to that, and also the Wall Street Journal editorial referring to you on Monday as the leading, Senator Rubio, as the leading GOP proponent that and I want to get this quote right, the leading GOP proponent of the idea that the Reagan tax-cutting agenda is a political dead end and that the party must now redistribute revenue directly to middle-class families. So your reaction to that criticism specifically?
I'll put them down, I guess, as undecided on this tax plan. But look, I don't think the Wall Street Journal or any conservatives have any quarrel with what we've done on the pro-tax side, on the pro-growth side of this debate. I think it all comes down to the child tax credit. And I would say two things about that. If we eliminated this additional child tax credit, the most you would get is maybe 2% reduction in the top rate, and if you wanted to pay for it in the way that some are asking for. I think our argument is the one that Senator Lee's made, and that this is not a redistribution because this money doesn't belong to the government in the first place. What we are recognizing is that within our existing tax code, there is a penalty for those who are raising children. Senator Lee perfectly described it in the outset. He described two identical families, one raising 4 children and one that's made the decision not to have any children. Both are legitimate choices, but the family raising 4 children has additional costs that they are contributing not just to their family, but to America's future, and the tax code doesn't recognize that. So again, you can't redistribute what already belongs to you, and in this case, this is money that these families are earning. And I'm looking forward to a vibrant debate. I'm glad that the conservative movement has space for this sort of vibrant debate. I'm a huge proponent of everything President Reagan did, and I think he was a historic figure and, quite frankly, my favorite president, certainly of the 20th century. I also think we need to recognize that the 21st century has some significant differences from the era in which he governed. Tax rates are different, globalization is real, and we need to stay globally competitive, and we need to recognize that in the 21st century, families face expenses and challenges that weren't there in the 20th. My family made it to the middle class as a bartender and as a maid. It would be very difficult for them to do that in the 21st century because of what those jobs paid. Eventually, my father would have had to become an electrician or a welder. My mother would have had to become a dental hygienist or a paralegal in order to live comparable lifestyles from what they had in the 1980s. A great time. It was the last time the Miami Dolphins were in the Super Bowl were in the 1980s, so I love the 1980s. But we're in the 21st century, and I think one of the things conservatism has always been about is common sense and reform. And this is a common sense reform about the realities of a new era that we now live in. And conservatism, at its core of limited government and free enterprise, it works better in the 21st century than it did in the 20th even.
This is not a turn away from Ronald Reagan. This is emulating Ronald Reagan. Burkean conservatism always involves applying conservative solutions, conservative approaches to meet the challenges of our time. And this is the next stage of the implementation of Ronald Reagan's vision, in which we have a fairer, simpler tax code, and that's what we've set out to achieve, and I think we do that.
Next question. Anybody over here? Yes.
I think there's one, Jay Lair, the Heartland Institute, I think there's one point you're missing that would help you promote the child tax credit. With the exception of immigration, our nation is losing population. We're under the replacement rate, and we shouldn't be shy about helping families to have children because of the reasons you said. We need people paying taxes and supporting the programs that are going eventually bankrupt. I haven't heard you talk about in a positive way that we should be supporting child rearing, not for a religious reason, but because the country needs population to support itself.
I certainly would agree that family formation, marriage, and having children is not an activity we ought to be discouraging. But the idea behind this is not to encourage it, not to subsidize it. It is simply to get rid of a penalty, to level the playing field. The playing field is not level right now with regard to American moms and dads, and that's what this is doing. I'm personally not comfortable with describing that as an encouragement, as a promotion, as a subsidy, because it's not that. We're just taking away a penalty.
I would just add that I personally have done my part. I have 4 kids, so but let me just add this. I mean, if you go ahead, if a business entity were to invest in capital, or were to invest in machines, were to invest in expansion, they receive a tax benefit for doing so. But if an individual family decides to make an investment in people, in our future, in human beings, all we're asking is that the tax code recognize that as well as an investment in the future, in individuals that are going to be the cornerstone of America's future. That doesn't mean that, we're not approaching this with the thought process that someone's going to sit down with their accountant every tax year and say, what you really need to do is have 2 more kids. I don't think people are going to make decisions that way, and that's not our intention. That being said, it's a reality that raising children in the 21st century is expensive. From daycare costs for a 2-parent home that are both working, to educational costs, to all the other costs embedded in raising our future taxpayers. We just want our tax code to recognize that and create parity for families that have decided to take on the important work of raising America's future.
We have time for one more question. This gentleman had his hand up, and then the senators have to go.
You meant Charlie Spearing from Breitbart News. You mentioned conservatives with flatter tax plans. Why reform the existing system instead of a monumental flat tax that effectively abolishes the IRS?
First of all, I love the idea of abolishing the IRS. Whenever we talk about that, a lot of what we're referring to is the complexity of the tax code and the corresponding discretion that we give the IRS along with that complexity. A century ago, our tax code was about that high. Today, it stands about 12 feet high. And that's a big problem. I sit on the Joint Economic Committee. We had a hearing not too long ago when he had a gentleman who was a witness for our committee testifying. He had a PhD in the U.S. tax code. I feel really bad for that guy. I mean, that's his dissertation. That was his whole focus of his doctoral studies. I asked him, do you do your own taxes? And he said, no. I said, why? And he said, well, because there is absolutely no way I could know with certainty that I was getting it right. So the complexity is a big problem. That's part of what we're trying to achieve here. I love the idea, the simplicity that would go along with a single rate taxation system. And if we were starting from scratch, I think that would make an enormous amount of sense. We do, however, have to start with the system that we have rather than the system that might have been had we followed a different course in decades past. And as I've looked at it, as I've examined it, I can't find an effective way to move us to a single rate system that protects America's middle class, that doesn't involve raising taxes on a whole bunch of middle-class Americans. And but there is a way of doing that with two rates, and I think that's what we do here. We achieve an enormous amount of simplification and leveling of the playing fields without imposing a middle-class tax hike.
Yeah, just to add to that, the power of the IRS is directly related to the complexity of the tax code. The more complexity we build into the tax code, the more power we give government to collect taxes or administer laws, the more powerful all bureaucratic agencies become, especially the Internal Revenue Service. Earlier in this conversation, someone brought up Obamacare. Obamacare has forced the IRS to add additional employees just to enforce that law. And so I think what we're trying to get here is to a point where that is flatter and simpler, and thereby easier to administer, and thereby reducing the size and the scope of the IRS and of its power. But I think it would also have implications on other regulatory agencies in America that are also engaged directly or indirectly in the administration of our tax code as well.
Please join me in thanking Senator Lee and Senator Rubio.
Thank you. Thank you.